This is an objective entry short trade setup right now for the S&P 500 futures daily, each candle representing a day. We have a primary trend line off the April 2020 highs here, and plenty of wicks and candles to validate through all this haziness, and we've got plenty of reaction to validate it. You can see all along here, plenty of reaction. I had mentioned a sell signal, a break of this trend line. We hit my first target, we had hit my second target, and dip buyers came in and stepped into the button right here, almost to the button. I might have been a little less than 0.25% off, if that. And they bought it right back up, came back up and back tested this primary trend line again. Back tested it multiple days for almost an entire week here. Back tested, and it got rejected pretty fiercely. Came back to hit these targets again, and dip buyer stepped into the button, came back into that resistance level, got rejected again. Here we go, right at that 41.39.15 again, came back and rallied above that resistance level, shot up here, I think through that Fed meeting that Jerome Powell had pumped up, and with that quarter rate hike, and here we are back testing off it once again, and this provides an objective entry short here. We have the 50-day moving average that just completely punctured through that 200-day moving average in this red dotted line here, and that spells a death cross. That's what that is right there. When the 50-day moving average punctures through that 200-day moving average, that's a death cross, and that death cross is still very much intact here. And here we are right at that 44.43 level. This provides an objective entry short. When you talk about the risk versus reward ratio, it still has to take out that 200-day moving average as well, alongside that 44.5809 resistance. You've got the primary trend line, you got the 44.5809 resistance alongside that 200-day moving average that needs to be taken out. This is a trio of resistance that needs to be taken out, and a stop loss of 1.8% if the bulls can take it across and pump this back up above this trend line. That would be bullish, and it could take up its uptrend line here, and continue and get out of this primary downtrend line, which it really has taken out. But this is its last key support, last key resistance level here, versus the reward of a 2% drop, 42.70 for a 4% drop, and 41.39 for a near 7% slide. And if we were to take out that 41.39.15 and retest those lows and they get taken out, watch out. That's going to spell huge trouble for these traders, and the broad markets will come to start folding over, and I'll issue some if we get even close to that and we have a reaction off this trend line. I'll start nailing out some more targets here, but as for now, this is a short entry. SPY traders, S&P 500 broad market traders, this is it. This is your moment. This is a full position short trade setup.